Greetings, everybody. I trust you're good. Let's have a look at UStech ahead of NFP, which we have in a couple of hours' time. So, without wasting any further time, let's get straight into the actual analysis. And as you guys can see, I am on the weekly chart. And on this particular chart, the first thing that I can see that is very much important is the fact that we have this pattern over here, which is an inverted head and shoulders pattern. This side would be the left shoulder, this would be the head, and this would be the right hand shoulder. And we can also see that the neckline of this particular pattern is somewhat in this area. And you guys know by now that whenever it comes to these kind of patterns, ideally we want to see price breaking to the upside of that neckline, coming back to the neckline to test it, and then at that point is where we would look for potential buying opportunities. And especially because if you look here, we actually have that candlestick, which is a bullish candlestick with a small body and quite a long upper wick, and it tells us that at that top where it ends or where it starts, there's a lot of liquidity sitting at that point, and that liquidity needs to be triggered by the market at some stage. And that is because there's a lot of money actually sitting at that level. So what this means, guys, in other words, is that there is a lot of scope for price to move up. There's a lot of incentive for the market to keep pushing up, and that is because, guys, as I say, there's a lot of money sitting in and around that level over there. Nonetheless, having said that, the market is still very much far off from this area over here, and actually at this point in time, I would say that this area over here, as much as it is carrying all of that liquidity, it is not so important at this point in time, right? So guys, as much as we have this inverted head and shoulders pattern that I just spoke about, can you also see that we have a smaller structure in the form of an overextended W structure, which also has a neckline more or less at that level? It's an overextended W structure because that first leg is much lower. The first leg is over here and it's much lower than the second leg, as you guys can see, right? And similar to the inverted head and shoulders pattern, when it comes to W structures, we also want to see price actually closing above the neckline, right, of this W structure, and then coming back to the neckline to test it. Can you guys see that at this point in time, price actually came back to test the neckline at this point over here? And at this point, guys, is where we should be looking for potential buying opportunities. We should be looking for potential buying opportunities. And in regards to this smaller W structure, at the very least, I would like the move to actually end at this point, because that is where exactly it started, in my humble opinion. Can you guys see that, right? So just bear with me, guys, while I add my neckline. Just bear with me. Let's see. I'm just gonna make this a different color. Let's have a look. Make it a blue. Let's see. Right. So we could say, guys, that this level over here is our neckline, right? And as I said, it is the neckline of this smaller overextended W structure, right? So guys, what else do we see in regards to this pattern over here, which is the W structure? Another thing that I see, guys, is that, remember earlier I spoke about how we have this candlestick over here, right, which is carrying a lot of liquidity at that point. Can you guys also see that we have another one over here? It is also a bullish candlestick with a small body and quite a long upper wick, and it too tells us that we have a lot of liquidity sitting at that point. And similarly, that liquidity also represents money that needs to be triggered by the market at one point or another. So I'm just going to mark this level as well, right? And the next thing that I'm going to do, guys, is to utilize the Fibonacci retracement tool just to see if this neckline over here of this overextended W structure actually aligns with any key numbers that we have on the Fibonacci tool, right? So what we're doing, guys, is gathering evidence and confluence for why we should be actually buying at that neckline, right? So just bear with me, guys, while I add my Fib tool. Let's see, I would add my Fib tool more or less in this manner. Let's have a look. Let's have a look. So guys, can you see that the neckline, which is over here of this smaller W structure, right, actually aligns, we could say, with both the 38.2% as well as the 50% Fibonacci retracement levels, right? So there is confluence in as far as looking for potential buying opportunities at this point, right? Potential buy opportunities, that is a key phrase, potential buying opportunities. We're not just gonna buy, guys, we're gonna look for the reasons for why at this level over here we should be looking for potential buying reasons. So far we have two reasons for why we should be buying at that point. Number one, right, we have this W structure, right? Number two, actually we have three reasons. Number one, we have this W structure, right? Number two, we have price breaking to the upside of that neckline and coming back to just test that neckline. And number three, we have the neckline aligning with both the 38.2% Fibonacci retracement level as well as the 50%, right? Having said that, right, and given that we have all of these reasons, we need further reasons for why we should be potentially buying at this point, right? So what we're doing, guys, as I said, at this point is gathering evidence and gathering more reasons for why we should be buying at that point. The more reasons we have, the better, right? Anyway, let's proceed, guys. So what else do we see that we should be paying attention to? At this point, I don't see much. So what I'm going to do is head down to the daily chart. All right, and here we are on the daily chart, guys. And just to recap, guys, remember, on the weekly chart, we spoke about how we have this overextended W structure and it has a neckline at that point. And we said that price came back to the neckline to test it. And at this point is where we should potentially be looking for buying opportunities, right? But let's zoom in and see what's actually happening on this particular chart, right? Let's see. In fact, before we proceed, guys, the first thing that I'm going to do at this point is to add my daily channel. Let's see, how would I add my daily channel? I would add my daily channel more or less in this manner. Just bear with me, guys. Let's see. Could I edit in this manner? Let's have a look. So for now, I can add my daily channel in this manner, guys. And just remember that for the most part, we need to ensure that all the drawings that we add to our charts are as close to perfection as possible, right? And there we go, guys. So we could say that this is our daily channel, and we can see that the market is in an upward trajectory, more or less. Can you guys see that? And what this says to me is that we should be looking for potential buying opportunities, and this adds also as confluence, guys, because remember we spoke about this level over here and potentially buying, right? And another reason for why we should be buying, or that confirms that we should be buying, is that we have the market in an upward trajectory in as far as the daily chart goes. Can you guys see that, right? However, we need further reasons for why we should be buying at this point, right? So what else do we see, guys? What else do we see at this point that we should be paying attention to? Let me just zoom in. Let's have a look. So guys, we have an opposing structure, right? Remember, we spoke about how we have this W structure over here, right? But if I were to zoom in a bit, you would see that we have an opposing structure in the form of an overextended M structure. Can you guys see that, right? And it also has a neckline more or less at that point, right? So what this means is that buying or selling at this point is going to be risky, right? That's what it means. Buying or selling at this point is going to be risky, and that is because, guys, we have two opposing structures. Number one, we have that W structure, right? And number two, we have that smaller M structure, and they both have necklines in more or less the same area. Can you guys see that, right? Making it very risky in as far as buying or selling at this point, and that is because the market can go in either direction, right? Nonetheless, having said that, we're gonna go to the lower time frames to see if we can possibly get our way with getting entries, even though at this level over here things are a bit risky, right? Anyway, what I'm gonna do, guys, is add a neckline for that M structure. Just bear with me, guys. I just hope my lines are just not too confusing, but I'm just adding all of these lines so that you guys can see exactly what it is that I'm referring to, and so that we don't get confused as we head down to the lower time frames, right? So as I said, guys, let's see. So we have this W structure over here, and we have this opposing M structure, and they both have necklines at the same at a similar level rather. And I said that at this point things are a bit risky as far as buying goes, right? Nonetheless, let's see, guys. From here, what I'm gonna do is head down to the H4 chart. Before I do so, guys, remember, I just want to point out actually that as much as we have this M structure over here, just keep in mind that whenever we have M structures, what normally happens is that a lot of traders and investors sell on the second leg of that M structure, and they place their stop losses just above, right? So we have as much as we have rather this area over here where we have that liquidity candlestick, we also have a lot of stop losses that are sitting in and around this area, right? Which adds as further confluence that indeed the market may actually push further up, not only to grab the liquidity that's sitting at this point, but also to grab all of those stop losses that are at this point as well, because stop losses also represent liquidity that needs to be grabbed by the market at some point, right? And guys, can you also see that we have another candlestick over here? It is a bullish candlestick with a small body and quite a long wick. So it too tells us that at the top we have a lot of liquidity there. And as I've said, guys, multiple times, that liquidity actually is money, and that money needs to be triggered by the market, right? So can you guys see that there's plenty of reason for why we should be looking for buying opportunities, and there's plenty of reason for why the market should push further up. That is because there's a lot of money trapped above, right? Anyway, let me head down to the H4 chart. Let's have a look, guys. Let's have a look. Let's have a look. Let's see. Okay, so here we are on the H4 chart, more or less. Let's have a look. Okay, that should be fine. All right. So what else do we see, guys, now that we are on the H4 chart, right? And just to recap, remember on the bigger time frames we spoke about the W structure at the top, as well as this bigger M structure over here, and we said that they both have necklines at more or less the same area, and that buying or selling at this point be risky. But let's see if we can actually find a way of getting around that, right? So let's see, guys. So in regards to the H4 chart of Nasdaq 100, I'm just going to start off by adding my H4 channel. Let's see, how would I add my H4 channel in this regard? I would do it in this manner, more or less. There we go, right? So what else do we see, guys? Remember, we spoke about how we have this M structure, right? So yeah, guys, so what else do we see? Another thing that I see, guys, is that as much as we have this M structure, we also have an opposing overextended W structure at this point, right? It's also an overextended W structure because that first leg is much higher than that second leg, right? And if I can just zoom in a bit, this structure, right, also has a neckline more or less at this point, right? So in as far as looking for buying opportunities goes at this point, guys, I don't see any actual opportunities, right? But at this point in time, my bias is for the market to actually push further up, right? And another reason, as I've just said, is that we have this W structure which has a neckline at this level over here, right? So what I would love to see actually happen next, guys, is because we also have this W structure, right? I would love to see price actually closing above the neckline of this W structure. Let me just actually draw it properly. I would love to see price closing above the neckline of this W structure, right? And then also violating the neckline of that other M structure that I spoke about. And then if it does so, I would love to see the market push further down to test both areas. And at this point is where we would have confirmation, I believe, in as far as looking for potential buying opportunities goes, right? So that's what I would love to see on my end, right? I hope what I'm saying makes sense, guys. So let me just repeat that. What I'm saying, in other words, is that because we have this W structure, right? Remember, it also has a neckline at that level, right? And do not confuse this neckline with the neckline of that bigger W structure that we have at the bottom, right? And also remember, we have an M structure on this side, which also has a neckline at that point, right? So I would love to see the market actually closing above this neckline first of this W structure, and then pushing up to violate and close above the neckline of this M structure. And then I would love to see price give us some sort of retracement back to this level, and if it does so, at this point is where we would look for further buying opportunities, right? And I would love to see price actually push further up to these areas over here, which I spoke about on the bigger time frames, right? So as much as I'm saying that, guys, just bear in mind also that we have this opposing channel over here, and already we've had a rejection over here, another rejection over here, and in the future we might get a rejection, a third rejection rather, at that point, and price may actually push further down. Why do I say further down? That is because, remember guys, we also have this M structure, and it also has a neckline at that point, and at this point the market may actually push further down, guys. That is why I actually say that buying or selling at this area over here is actually very, very risky, right? Yeah, so that is it, guys. And as far as my analysis goes, as the market progresses on my side, I'm sure I will be able to find some entries. Nonetheless, having said that, just make sure that you practice good money management and you don't take too much of a risk. And yeah, just look after your account. And yeah, that is it, guys. Just remember to, if you do like this channel, subscribe if you haven't done so, and also do like the channel, or rather the actual video. And if you have any further questions or comments, just make them in the relevant section of this particular video. And peace out, everybody.